it's Maureen Lein, your local lender with rate, here with your last weekly Mortgage Minute of 2025. Today is Wednesday, December 31st, and I want to wish everybody a happy new year, and I'm looking forward to a prosperous 2026. So here's what you need to know as we head into the new year. We're going to first start with the Federal Reserve minutes from their December meeting. And the big takeaway, everybody, is, well, the Fed still believes that inflation is gradually moving lower, especially as housing inflation cools. Now, keep in mind, this meeting happened before the latest CPI data, which showed core inflation dropping from 3% to 2.6%. So the outlook today is a bit more encouraging. On the labor market, the Fed acknowledged continued softening. So most members said the risks are clearly to the downside, and several warned that in this low hire, low fire environment, any sudden layoffs could push unemployment higher very quickly. Now that matters because a weakening labor market, well, typically supports lower interest rates over time. And we're already seeing signs of that slowdown. A recent Yale CEO survey showed 2/3 of CEOs plan to freeze hiring or reduce staff in 2026. And consumers are pulling back on discretionary spending as well. All of this keeps the rate cut conversation alive heading into the new year. Now let's talk housing, because activity is picking up. Pending home sales jumped 3.3% in November, hitting their highest level in nearly 3 years. And that tells us buyers are responding to the lower interest rates that we've been seeing recently. And at the same time, home prices are holding steady. Case-Shiller and FHFA, well, they both showed 0.4% monthly price gains year over year. Prices are back in positive territory. So demand is improving and values are stabilizing, which is important for both buyers and current homeowners. Now for the most important part, well, rates today, the mortgage-backed securities fell 15 basis points and closed at their worst levels of the day. In plain English, well, when MBS fall like this, mortgage rates tend to move higher and pricing worsens. And this is a good reminder, everybody, that rates don't tend to come down quickly, but they certainly can go up very quickly. And here's my message to you as a loan officer. If you're waiting for the perfect rate, well, you're risk missing a really good one. And being fully approved and ready to lock gives you the control. If rates dip, you can act immediately. If rates spike, well, like they did today, well, then you're protected. The people who save the most aren't the greediest, everybody. They're the most prepared. So if you're thinking about buying or refinancing, or even just want to be ready, let's get your loan application completed and your numbers dialed in now so you are positioned to pull the trigger when that opportunity presents itself. And thanks, everybody. I appreciate you watching me every week. I am looking forward to seeing you next week. And as always, please hit the like button and share and subscribe, and have